identified no safety concerns. The Astra vaccine has faced numerous setbacks, most recently over possible side effects. In Germany, Chancellor Angela Merkel has proposed keeping lockdown restrictions in force for another 4 weeks. Coronavirus cases have risen above a level that may prompt government action to avoid healthcare overload. Merkel and regional government leaders will discuss their options today. And U.S. Defense Secretary Lloyd Austin made a surprise trip to Afghanistan. President Biden is trying to decide whether to keep U.S. troops there, and Austin told reporters that Afghanistan's violence level remains, quote, pretty high. A peace deal reached last year calls for the 2,500 U.S. soldiers there to be withdrawn by May the 1st, but President Biden says that deadline would be tough to meet. China is describing the first face-to-face meeting with the Biden administration as useful. Beijing called for more discussions after a tense start to talks last week in Alaska. The U.S. accused China of human rights violations, whilst China said the U.S. was running a flawed democracy. Beijing says the two countries did agree to form a working group on climate change. And it's the biggest purchase of a U.S. asset by a Canadian company since 2016. Canadian Pacific Railway has agreed to buy Kansas City Southern for $25 billion. The combined railroad seeks to create a 20,000-mile network linking the U.S., Canada, and Mexico in the first year of the new trade alliance. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
I came up with this $1.9 billion for this whole COVID and the economic relief side of it as well. We were told that it could never pass. We'd never get any help. Well, we didn't get any help in the Senate or the House, but you have 55% of the Republicans in America supporting it. You have 90-some% of the Democrats.
The President of the United States at the CDC after passing a monster plan down in Washington. From New York City this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keane back with us next week. Here's the price action you're waking up to this Monday. Equity futures up 6 or 7 points. We advanced 0.2% on the S&P 500. On the Nasdaq, up 0.8% on the Nasdaq 100. And a bid into the bond market yields lower by 4 basis points to 167.69. We need to talk about this pandemic and the great effort around vaccines in America and around the world, and the latest trial data for phase 3 trials for the AstraZeneca vaccine in the United States, 79% efficacy. And here's the most important number, I think, 100% efficacy against severe or critical disease and hospitalization. And I'm pleased to say that joining us now is Ruud Dobber. He is the Executive Vice President of AstraZeneca's Biopharma Business Unit here in the United States. Ruud, it's great to catch up with you, sir. Let's start here. You are a company under siege for a vaccine that you're not looking to profit that much from. What's your message to the rest of the world right now?
The message is relatively clear. First of all, thank you so much for being in the show. But it's clear that we have a vaccine which is highly effective, is showing an unprecedented high efficacy against severe disease and hospitalization. And that's important, of course, for the United States, for Europe. But let's not forget that this virus is everywhere in the world. So we are thrilled with the data, and hopefully it's the next step for all of us in order to combat against this terrible pandemic in the world.
You mentioned Europe. Some doubts were raised around the efficacy of this vaccine and the risk around it too in Europe over the last several months, specifically on the risks around blood clotting. What have you learned of phase 3 trials here in America about that specific issue, Ruud?
Yeah, as you can imagine, the Data Safety Monitoring Board went literally with a magnifying glass through every case. And the very good news, and it was also in our press release, is that they didn't see any imbalance regarding thrombotic events in both the vaccinated group and the non-vaccinated group. So that's a great signal, and that builds on the very strong feedback we got last week from the MHRA in the UK and EMA, saying that the vaccine is highly effective and safe for use. Now, it doesn't mean, of course, that, as always, for every product, for every vaccine, we will clearly monitor every case we will get. But it's fair to say that based on the current data, the vaccine is highly effective and very safe.
I think that there's been a difficult time recovering after in December there was that study result out of the AstraZeneca vaccine that was somewhat confusing. There were 2 different groups. In one, it showed there was a 90% efficacy rate, and in another, it was 60-something% efficacy rate. How much do you think that's colored the view of people versus some other policy error, perhaps, on the part of politicians who haven't come out and endorsed the vaccine, perhaps, as much as you would have liked?
Yeah, I think that's always the case. The speed in which we are developing vaccines is unprecedented. We're not cutting corners in any way or form, but we are learning like we're doing for our other products as well. I think the importance of today is that this trial has been done in a phenomenal way. More than 30,000 participants in the United States, at Peru and Chile, showing an unprecedented efficacy, while the safety profile is extremely strong. So I think hopefully what happened in the past is gone. That this will further boost the confidence in the vaccine. We are very confident. Many regulators are very confident. The vaccine has been approved in more than 70 countries in the world, and our next priority, of course, is also to get this vaccine approved via an emergency use authorization in the United States. And we're going to apply that in the first half of April. And then, of course, it's in the hands of the FDA to make their final decision.
Do you have a sense, Ruud, of how widespread this sort of rare blood clotting development has become in the European Union? There have been a number of cases that have been reported. Do we have a handle on the scope of that?
Yeah, what we know is that it is a very rare event. Of course, we are looking into it. The EMA, the MHRA is looking into it. At this stage, it's very clear that there is no clear relationship between the vaccine and the events. Those events are also there in people without any vaccination. Having said that, patient safety is always the #1 priority for us, like it is for other manufacturers. So we take it very seriously. But let's not speculate. Let's wait for the data. We will do a lot of studies in order to get a better view on it, as well as the EMA and other regulators in the world. And of course, we also need to see the data from the other vaccines to get a very balanced view. But it is far too early to speculate about how many times it's occurring in the normal population.
I don't want to get into speculation right now on an important issue. So, Ruud, let's focus on reliable supply of this vaccine. And the issue around what is happening in Leiden right now in your Netherlands, there is a plant there, as you know, that still has not been approved to supply Europe, yet the Europeans are fighting over the vaccines that are being produced there. We've heard from several EU officials over the weekend, many publications printing the same thing, that the Brits are insisting that the plant there in the Netherlands must deliver the drug substance produced there to them. That does not work. What is produced in that plant has to go to the EU. We've heard that repeatedly from several publications. What's your interpretation of where supply from that particular plant can go and needs to go?
Yeah, so first of all, let's put it in perspective. The European supply chain is highly dependent on two large sites. One is based out of the United States, and the other one is in Belgium. So this is a relatively small site, and so I don't want to do politics. That's not my job. My job is, together with my other colleagues, in order to provide the vaccine to as many Europeans and as soon as possible. The site is playing a role. Of course, it will play a role for the European supply moving forward. But so far, for all the viewers, it's absolutely clear that we haven't used the site neither in the UK as well as in Europe. Both countries still need to approve this site. This site was originally meant to supply clinical trial material, so it hasn't been used yet for commercial supply. The EMA still needs to approve this site. So I think there's a lot of confusion, and there's no need for that.
Ruud, I understand you don't want to play politics, but you've certainly been dragged into the politics over the last year, and you and I need to talk again. AstraZeneca's Ruud Dobber. Ruud, thank you for catching up, sir. We're out of time, unfortunately. From New York City this morning, good morning. Alongside Lisa Abramovitz, I'm Jonathan Ferro. Tom Keane back with us next week, and here's the price action this Monday. Equity futures up by around 102 on a NASDAQ. We advance 0.8%. Bond yields come in on a 10-year Treasury this morning by 5 basis points to 167.51. And a euro starting to advance now. Euro dollar up to 119.26 and up by 0.2%. Though getting the attention of everyone worldwide in the FX market is what has happened with dollar lira. The lira weaker against the dollar. Dollar lira up by more than 10 full percentage points, and we are just south of an 8 handle. More still to come on a turmoil in EM. A hike from Turkey, from Brazil, and maybe more to come from Russia too. From New York City, this is Bloomberg Surveillance.
minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
From New York City for our audience worldwide, live on TV and radio, this is Bloomberg Surveillance, and here's the price action. It all starts right here in the bond market. 2s, 10s, 30s, bid into the long end, bull flattener. We're down by about 5 basis points on 30s to 238. On 10s right now, yields into 167.51. It all begins here because it spills over to here. Switch up the board and get to the equity market. Is this a story of correlation or causation, a reinforcing narrative? Yields are lower, the NASDAQ is bid. You're familiar with this story. Maybe it is just a reinforcing narrative now. We all understand it, and that's the story, and you can't fight back too much. Yields come in, and we push higher on the NASDAQ 100 by 0.9%. For the bond market, and therefore for this equity market, Chairman Powell, the next port of call for this market. 9 a.m. Eastern, we'll hear from him. We hear from him again tomorrow, again on Wednesday, and a ton of Fed speak in between. You can hardly wait, I know. Switch on the board into the FX market. Let's finish on this. The big event over the weekend. The Turkish central bank governor is gone again. Clip it, replay it, might happen again in the future. You're familiar with that story as well. Dollar lira out to an 8 handle briefly, 7.92 right now. The move is about 9.73%. Can they buy back credibility? And when the central bank governor starts talking about being committed to price stability, what really matters is how he thinks you can achieve price stability. Because this is a central bank governor and a leader of Turkey right now who believe that higher interest rates lead to higher inflation and lower interest rates lead to lower inflation. Do they embrace that theory, or does this move overwhelm them and push them to do something else? We'll talk about that through the morning. Let's get you some movers, and let's say hello to Taylor Riggs.
John, you walk backwards. How do you do that?
Taylor, try it. You can
I'm
walk
in
back.
heels. There is no way I'm going to be trying that. I can't for you.
Maybe we can get Tom Keene in heels and he can try next week. Maybe.
Yes, let's do our best Romaine Bostic impression. In the meantime, take a look to the downside. Interesting that some of the travel stocks that we've been following, some of those cruise lines, really concerns that there could still be a lost summer. So trying to look at sailing out of the Bahamas, for example, to avoid some of the CDC guidelines here in the U.S. that still have a no sail zone. So you do have some of those airline stocks too also falling despite the stronger AstraZeneca vaccine news. So that's certainly to the downside. John, let's flip up the board, though, and go to the upside. There's actually a lot more action there. Take a look at Kansas City Southern. They're getting a bid earlier, as much up as 25%. This is a $25 billion deal from Canadian Pacific. Analysts think that there actually will not be regulatory scrutiny, so this is a very good deal. Remember, Canadian Pacific Railway has tried a few different mergers along the way. This one could actually be the one that gets done. Go down the screen. Can we talk about Tesla at 3,000? That's what Kathy Wood thinks. earnings. The bull case, 4,000. The bear case, 1,500. This is a stock that's at 680. As you said, John, with yields lower, Tesla goes higher. But I have to say, a $3 trillion market cap at $3,000 would be unbelievable. That is the call by 2025. Finally, NXP Semiconductors, John. The call here is it is added to the S&P 500 at the open. Typically, you get mixed results on the first day of trading when it's added to the index or not. So this is going to be a stock that we're watching at the close.
Taylor, thank you. Looking forward to the program. Love the idea that 1,500 can be a bear case. But there we go. Taylor Riggs back on the close between 2 and 5 a little bit later this afternoon. Lisa, I have learned a hard lesson, though, over the last decade or so around some of these visionaries. I witnessed a clip a little bit recently of 60 Minutes from maybe 20 years ago. 20 years ago of 60 Minutes, and the interviewer was very smug, talking about Amazon and its ability to take over Sears and why it was absurd to even think about Amazon taking over Sears. And when you look back at that, I think the lesson I take from that is don't be that guy. Don't be that guy. And I think there's an important lesson there as well. I can't see the future. I'm not very good at anticipating it either. So when it comes to asking questions about these big issues, I think you've got to be somewhat humble given what we've seen over the last few decades.
And I would argue perhaps now more than ever, just because we are on this technological revolutionary cusp. And a lot of people say there are going to be all of these changes, and really the new jobs are going to stem from these areas, whether it's batteries that can operate in cars to Tesla's wheelhouse, or electricity that is more green. I do have to say, though, you do see this shift in markets toward growth away from value on a more consistent basis. Blackstone doing that as well, because they see you do need the visionaries right now. That's what's going to generate the growth on all counts, John.
So a 1,500 bear case gets your attention, doesn't it, Lisa? It really does.
Yes.
That's the bear case.
Says everything you need to know at this point, given how high it's gone.
That's most people's bull case right now, but hey, let's
Yes.
talk about China, foreign policy, a really important issue over the last week. It was stunning to see two delegations, the United States and China, face off in Alaska in the past week. You know how it was meant to go. One party gets 2 minutes, the other party gets 2 minutes. They close the door, tell people like me to get out of the room, and then the conversations start. That is not what happened. The United States kept the press in, they snapped back, and things weren't looking good even after that either. So let's talk to a man that has seen this a million times over the last few decades. It's Ambassador Robert Hormans, and he joins us now. So Bob, let's start there. How many times you've seen this in your career in various parts of the world, and how original that moment might still have been in Alaska last week?
Well, this was a bit unusual. Normally, these things are very well set up, 2 minutes for one, 2 minutes for the other, and then the pool, or the press spray as they call it, leaves, and then they get down to work. I think this meeting was designed to do several things that are a little different than in the past. One, it was the first high-level meeting between China and the U.S. Second, the audience was at least half domestic. China wanted to demonstrate to its own people that it was taking tough positions on difficult issues, particularly bottom line, or what they call red line issues. But the U.S. was also conveying a message, too, that we weren't going back 5 or 10 years ago. This was going to be an American relationship with China that was much more assertive. And when China took more time than was anticipated, Secretary Blinken decided that he was going to assert the desire of the United States to go back and identify some of the issues that China raised and talk about them while the press was still there, which was somewhat unusual. But so it got off to an unusual start. But the fundamentals, I think, were more or less predictable. The Chinese wanted to assert themselves, and the U.S. wanted to show that it was going to be a tougher U.S. than the Chinese had seen in the past, and that it was pushing China to take actions that the U.S. had not necessarily pushed them very hard for before the Trump administration. Obviously, the tone was very different from the Trump administration, but the strong line, in many ways, really was a continuation of much of what the Trump administration was saying. We'll see what it does.
Bob, if I can push you a little bit harder on that particular issue, on the new approach, so to speak, and the results it might generate. Are we doing anything different to what we've tried over the last several decades? And if the ultimate goal of diplomacy is to try and adapt, shape, change behavior of Beijing, do you see any change on the horizon from this approach?
I think it's going to be very difficult. I think that the Chinese have made, first of all, the Chinese, at the bottom line is that they believe in what they call Dongsheng Shijia, which is that the East is rising and the West is declining. They come into this period with a high level of confidence in the way they've dealt with the pandemic internally in China since the outbreak. Their economy is growing. They're playing a much stronger role in the global economy. President Xi is becoming a major leader of multilateral and regional events. So they have a level of confidence. And the Chinese wanted to project that. President Biden's team, which is a terrific team, I mean, Tony Blinken and Jake Sullivan are really people I've worked with. They're first class. And the United States is now saying, look, this is going to be the issue of the decade and several decades in the future. And we're going to be very persistent. We're going to say what's on our mind, and we're going to take actions. The question is, what are they going to do? And this meeting was more about statements and positioning rather than specific sets of actions that the United States plans to take in, say, the South China Sea. The United States has been active in the South China Sea. The president has taken tougher actions on technology. President Biden has. So I think we're going to see a ramping up of pressure by the United States on China in some areas. What they will be and how far the U.S. is going to go, the U.S. is still reviewing that.
That was a very polite way, Bob, of saying that this meeting was entirely for the press and for sort of the image and not for any substance. There is a question about whether this push to collaborate when it comes to global warming is real, or whether this also is a statement for the press and to try to appeal, frankly, to the sort of more left-leaning Western media that back President Biden. Is that your sense of this?
Well, that would be the one issue where I think there is a prospect of some level of convergence. And that is because the environmental issue in China is a very important domestic political issue as well. China, as you doubtless know, has had a big pollution problem in the past. And there's a lot of support among Chinese for a more proactive policy on climate change and environmental issues. And for the Chinese, it's a way of their showing that they want to be part of a global leadership, global cooperative efforts. So I think, and of course, President Biden, this is a big issue for him politically. It's certainly a big issue for Americans at home. It's certainly a very important part of the Democratic Party's platform and the campaign and the support of the Democratic Party for the president. So I would say in this area, along with, I would think, down the road, cooperation on healthcare issues, on cooperation on trying to deal with avoid future pandemics, I would say those would be the two areas where there is a chance of a higher level of convergence than many other areas. So this was, I think, good public relations, but I also think there's some substance behind it.
Bob, we're lucky to catch up with you, sir, as always. Let's catch up soon. Robert Hormat's there, Tiedemann Advisors Managing Director. Lisa, there's a man who's served, I think, 5 presidential administrations with some important things to say about what we witnessed last week and what was maybe not as important, which was the part of it which was just for our consumption, the domestic consumption, for the press maybe as well.
Yeah, there's a question, of course, also how hard President Biden will really be on China, or whether those words were for the press. That's how China is trying to spin it. How much was that really reality?
On this administration, on the economy, Heather Boushey, the White House Council of Economic Advisors member, will be joining us a little bit later this morning. She'll join us in the next hour. Looking forward to that. Equity futures up 10. We advance 0.25%. Bond yields in 4 basis points to 167.69. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The European Union is on the verge of halting coronavirus vaccine exports to the UK. The bloc is risking a sharp downturn in relations with London to try to turn around its lackluster vaccination campaign. The EU will likely reject export authorization of AstraZeneca vaccines to the UK until the drug maker fulfills its obligations to the EU. Miami Beach is extending an emergency curfew for up to 3 weeks. The day came The move came a day after police were overwhelmed by late-night crowds and made scores of arrests. On Saturday night, people on famous South Beach ignored social distancing and mask guidelines while celebrating spring break. Police used pepper balls to try to get the crowd to break up. And Goldman Sachs says that U.S. stocks are taking President Biden's tax plans in stride. In a note, Goldman strategists say that stocks are pricing in the good news around infrastructure and showing little concern about tax hikes. And billionaire Leon Black is leaving the private equity firm he founded a few months ahead of schedule. Black is giving up his roles as CEO and chairman at Apollo Global Management. He says he's leaving now for health reasons. Black had been under fire for being the main client of the disgraced financier Jeffrey Epstein. Another Apollo co-founder, Mark Rowan, will become CEO. The new chairman will be the former SEC chair, Jay Clayton. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
You're going to
to see temporary price spikes, Tom, right? There's going to be scenarios where we all want to go to the same vacation spot, or we're all going to want to do things that require a lot of oil, and it's going to take a while for supply to come back on. And you'll see some price spikes.
You will see those price spikes. Steve Chevron there, Federated Hermes portfolio manager from New York City this morning. Good morning. Alongside Lisa Bramvis, I'm Jonathan Ferro. Tom Keane out of the building. Here's the price section for you this Monday. Your equity market looks like this. On the S&P 500, we advanced 10 points, up 0.25%. On the NASDAQ, up 0.9%. We advanced 115 on the NASDAQ 100. In the bond market, your why maybe, yields are in 4 basis points to 167.87, south of 170. And in the FX market, euro dollar 119.27, up about 0.2%. But the main event, Lisa, has to be a 10 percentage point move in the Turkish lira to 7.94 and just south of an 8 handle right now.
I just am so amazed that Tom leaves, and in the one currency that he focuses on all the time when the world is raging everywhere else is the currency that's in focus, the lira. And yes, it is the one that is absolutely plummeting. I have to wonder, you keep talking about President Erdogan and how he keeps insisting that if you raise interest rates, that will actually lead to higher rates of inflation, despite the fact that economic research does not bear that out. If you will, it does not make it reality, and that seems to be the theme for President Erdogan, John.
Well, it can be real. You can hike interest rates by 200 basis points, then sack the central bank governor, send your currency plunging, and you will have higher inflation as well. And maybe that could be the story for Turkey in the coming month. Let's bring in Damien Sassoon, Bloomberg intelligence analyst on this particular story and head of our EM coverage too. Damien, who would have thought you hiked 200 basis points and here we are, the currency down on Monday morning. A 10 percentage point move against the dollar. Dollar lira up 10% to 7.93. What's your early take this Monday?
Oh, my early take is this is the 4th central bank governor's name that I'm going to need to remember in 3 years. And so, I mean, the reality is this, you know, the lira is off 65% over the last 5 years. This is not about rates. This is about the currency. And so, you know, reserves, I mean, Nasi Aghdal, the former governor, had gotten FX reserves in Turkey up to about $53 billion. It was headed in the right direction, but they're going to have to lean on that currency buffer now in order to protect the currency, because I fear with the 8 handle now in play, I mean, the ceiling has come off pretty much on the currency cross.
Can they buy back credibility? Do you think they'll even try?
Oh, absolutely not. They haven't had credibility in some time. Just on Friday, Jonathan, before this move, we were talking about don't mistake this for the fact that they have found religion. The Central Bank of Turkey is still playing with that. And look, Erdogan is still pulling the strings behind it. Look, my real concern here, you're right, is contagion into the other markets, specifically Egypt, South Africa, Nigeria. We are seeing CDS spreads trending higher. I mean, right now, the Turkish 5-year CDS spread is double that of South Africa after today's move.
How much liquidity is there in this asset class, given the fact that it's like a casino that may be so bad it's good, but most people are staying away?
Well, in terms of the lira cross, I mean, there isn't a lot of liquidity, Lisa. But the reality is this: 86% of of lira outstanding lira positions are versus the yen. So what you're seeing is the yen rallying today because it's this lira yen carry trade that's been in play and is now being rolled off. And you're seeing much the same in dollar lira as well. Look, I mean, it's anyone's guess as to where we're headed from here. But I'm absolutely dumbfounded by the fact that Erdogan, and we're here yet again having the same conversation for the 4th time in as many years, and it's just unfortunate. It's going to really spill over into emerging markets. It's really impacting sentiment to the negative.
All right, so let's talk about that, this contagion aspect and the fact that we may not have seen the worst of it. What are you looking for to determine whether this is going to cascade into something that's a much larger event than just a Turkey-specific story?
Well, it's the inflation impulse, Lisa. I mean, we've said this, writ large. I mean, the inflation impulse in emerging markets is that much more significant than developed markets. We can't even smell what's going on there. We've seen just a taste of it with Brazil last week, with Russia last week. We've got Mexico on Thursday. I'm not saying that the Mexican central bank's going to hike, but, we've got the Philippines, we've got Thailand. Central bank rate hikes are the future here, with U.S. yields now pushing higher. I mean, on the 30, we were testing 2.5 last week. We've come back on the 10-year. We've come back 10 bips. But, 5-year, 30-year, 150 basis points and still going. I mean, it's higher U.S. yields are negative for emerging markets, and it's definitely weighing on sentiment here.
That seems to be the thread that ties all of this together. The hike in Russia, the hike in Brazil, the hike in Turkey, the hike still to come from Russia as well, Damien. Who do you think has got a better handle on this right now?
Well, I definitely think Mexico does have a good handle. They didn't cut as much as many of these other central banks, and they are definitely far more linked to the United States economy and a U.S. recovery. So, that is one place you might want to hide out. But the inflation impulse, even in Mexico, is much greater. So, all bets are off. So, look, again, this is going to be about inflation. In Turkey specifically, you've got inflation running hot at 16%. Now, with rates where they are and expected to come in, this is not going to be good for all of the external debt, specifically the financial sector. Yapı Kredi, Akbank, Guarantee Bank, they're all going to get hit off the back of this, and I'm sure we're seeing that today. I mean, look at the Borsa, Istanbul, it's down, I think, 10% right now.
How much does the dollar weigh in on this? The idea that there seems to be a mass capitulation of the weak dollar call that we had, that was consensus heading into the year.
The dollar's everything, right? It's all about the currency when you're looking at emerging markets. But, you or I or anybody in this building, no one's going to tell me where the dollar's headed next. And I think that's the real structural impasse here. The fact that, anyone who has, the cojones to bet against the dollar when it's been a structural bull market for the past 10 plus years, good luck to you. I think there's a better way, a smarter way to play emerging market currencies, but that's a conversation for another day, Lisa.
Damien, we'll do that another day. Let's finish on this. We hear from the chairman of the Federal Reserve 1, 2, 3 times over the next 3 days. For EM right now, do you see anything coming together that could actually get on his radar anytime soon?
No, I don't. I think Powell was very, very clear. The 20-year bull market in duration is over. He is not going to defend the long end of the curve. And despite what we're seeing here in emerging markets, the Fed is not the central bank to the world, but the central bank to the United States, and they're beginning to finally act that way. And it'll be very, very interesting in this beta environment to see how emerging market yields react. So, Jonathan, the verdict is out.
Interesting times. The verdict is in. Damien, great to catch up. Damien Sassow there of Bloomberg Intelligence. Damien mentioning the Borsa Istanbul. That stock market is down by 9 percentage points. Chairman Powell is not here to protect that equity market. Lisa is not here to protect duration and the sell-off we've seen. Chairman Powell is not stepping in to stop any of that anytime soon.
Yet. This is the question, right? Damien raised this concern about contagion. And what happens if you start to get some sort of trickling out into other markets that will go back to the U.S., right? If you get a dollar that strengthens too much, that will accelerate the emerging market sell-off, and it could become Jerome Powell's problem. The key to me is that he's had a luxury of easing conditions in the financial world globally at a time when they're trying to accelerate the recovery. This has been a benefit to them. If they see a tightening, what does that do to their willingness to be the central bank to the world?
The issue right now, Lisa, as you know, is that the push higher in yields in America has been off the back of an unprecedented fiscal effort in America. This is about growth differentials, and higher yields are consistent. Higher yields in a treasury market are consistent with that outlook. The issue that the rest of the world has, select parts of the world, Europe and parts of EM too, is that push higher in yields is inconsistent with the outlooks in many of these regions. This is a problem that has started with fiscal policy, and this time around, arguably not monetary policy. So it really isn't Chairman Powell's problem at this point.
Yes, it isn't his problem unless the U.S. starts to lag behind and unless the yields begin to rise for other reasons. For example, the expiration of that exemption for the SLR, the supplementary leverage ratio issues for the banks.
Yields in today, 4 basis points, 168 on 10s. Coming up on this bond market, looking forward to catching up with Bob Michael, JP Morgan Investment Management CIO, on the outlook for emerging markets, global markets, and just the volatility in this treasury market over the last couple of weeks. Yields are in 4 basis points to 168. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
Not only just COVID, But just it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. Having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
Come to a place like this and be able to break some stuff and release some tension without going to jail.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars. Only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Concern that this is 2013 all over again and we have the tantrum. I think those concerns are overstated.
The numbers are so spectacular when you run them on the GDP growth side. No one wants to say it.
It would be a mistake to assume that the U.S. is now China and can sustain growth at these astronomical levels.
The bearish argument around runaway inflation is not going to come to fruition, and they're kind of fattening themselves up for the slaughter.
If inflation ticks up above 2%, then the chairman's going to get a little uncomfortable.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Yields down, stocks up. From New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Ferro. Tom Keene out of the building all week. Here's your bond market. 10-year yields come in around about 3-4 basis points to 168 on 10s. Lisa, I tell you where the bond market is, and you can tell me where the NASDAQ is.
Yeah, it looks like NASDAQ is down because the bond market, actually the NASDAQ is up because the bond market is rallying. You can see that that correlation continues to be very much intact. And the why of that is really what I think needs to be explored. Is it correlation, as you said, or is it causation, this idea that the higher yields means the lower in the big tech names?
It's certainly become a reinforcing narrative, as Michael Schauer said a little bit earlier. So let's touch on the price action to start things this hour. We look like this on the equity market. On the S&P 500, we push higher by 8 points, up 0.2%. There's the NASDAQ 100, up by 0.8%. And we've talked so much about this. I tell you where the bond market is. You tell me where the NASDAQ is. Here's the bond market right now in 3-4 basis points. Yields off the lows of the session, but still south of 170 at 168.57. Into the FX market we go. Euro dollar 119.29. The euro firmer by 0.2%. Your outperformance, the Japanese yen, has delivered much of that through much of this morning against G10 as we unwind some of those carry trades around the Turkish lira. Dollar lira, a move of 10%. percentage points, just south of 8 at 791 at the moment. And to finish things off on the S&P 500, what are we up by? 8 points, up 0.2%. Lisa, as you go forward from here, it's about the chairman. 9 Eastern, the chairman again tomorrow, the chairman again on Wednesday. And that scene that we're going to witness, the chairman, Jay Powell, alongside the former chair, Janet Yellen, now Treasury Secretary, over the next couple of days.
Yeah, they're working hand in hand on a policy that really is new. This idea that the federal government is going to be spending an incredible amount of money while the Federal Reserve is saying we are not going to raise rates, we are not going to stop buying bonds for as long as it takes to get back to something that's a strong recovery. They don't want to repeat the same mistake. But John, I feel like we can't overstate how calm the bond market is today, and frankly on Friday as well, following those statements by the Federal Reserve and by Fed Chair Jay Powell last week. Because honestly, this is a new regime of letting it run hot, and we're not seeing yields run away, and we're not seeing financial conditions tighten, and that, to me, is a huge statement, John.
Let's sit on that point. Bob Michael joins us now, JP Morgan Asset Management Chief Investment Officer. He joins us right now. Bob, here's your line. Fed to the bond market, drop dead. Is it that bad?
Well, it is. If you own long bonds, you're feeling a little bit unanchored out there. And if you think about Lagarde and the ECB, they said they're going to support the bond market. They're going to increase purchases. Same thing with the Reserve Bank of Australia. From the Fed, nothing, zilch, zero. No WAM extension, no Operation Twist, no increase in long purchases, nothing. So they'll support the front end, which will help with growth, and that just leaves the long end unanchored.
So, Bob, you and I have talked about this both online and offline about how much oxygen is left up here, and when the sell-off becomes self-limiting, 10s north of 170 last week, right now 168.75. How much oxygen is left up here?
Well, not a whole lot. I think you have to look at it in terms of real yields. And when you get to about a 0% real yield on their target of 2%, so around a 2% 10-year Treasury, I think the bond market will mark time there for a bit and see which way the economy and inflation are breaking. I think you'll have a pause. If real yields start to go much higher into positive territory, then you better have strong growth and you better have the inflationary pressure. Otherwise, it's going to have an impact across all asset classes.
Bob, there was another move that the Federal Reserve made last week, which was perhaps a little bit more under the radar. They did not extend this exemption for the supplementary leverage ratio. And the idea here is that banks were holding a lot more treasuries on their books, and they didn't have to hold additional capital to offset the potential risk. A lot of people said that made sense. The fact that it wasn't extended may prompt banks to have to sell some of these treasuries, yet we're not seeing that reflected necessarily just yet in the yields. Do you think this will become more of a problem for the auctions this week as the U.S. prepares to sell $206 billion of debt?
Yeah, and I know there's a bit of a two-way argument that's been created on the supplementary leverage ratio. I don't understand the two-way argument. If the supplementary leverage ratio, giving the exemption, didn't help the system absorb deposits and treasuries, then what was the point in the first place? So if it did absorb deposits and treasuries and now the exemption's gone away, it stands to reason that you're going to have more deposits and treasuries floating around the system.
Okay, so can you extrapolate out what that means for yields? I mean, could this lead to yields that do not lead to just loose financial conditions? Could it be a tightening in financial conditions because it's not stemming from growth expectations, but rather from a misbalance perhaps, or a change in the balance of supply and demand?
Well, that's a really good question. And I think for sure you're going to see obviously a lot more supply. We've got a $1.9 trillion stimulus working its way through the system. That's got to be funded. Now you don't have these big balance sheets there to absorb it the way they might have last month. And on top of that, I think the other thing you hinted at, I think this is the first step of the Fed tightening monetary policy. It's gradual, and I think we've just seen that without ostensibly coming out and supporting the long end and then letting the exemption on SLR expire. I think that's the first stage in the normalization or tightening process.
Bob, let's finish up on this and what you do day to day that we don't talk about enough. People come across to you, and I'll make this sound simple, and I know it's much more complex than that, but they come across to you with big amounts of money, huge mandates, and you have to put that money to work. As you put that money to work now and look at treasuries, when do they start to get interesting again for you and compete for capital with elsewhere?
Well, in the 10-year, not until you get above 2%. I don't see the reason to buy 10-year treasuries at a negative real yield. So that's the first thing. The second thing is there is some opportunity in the front end of the curve. As long as the Fed is continuing to support that market, you can buy credit there, you can buy high yield, you can buy securitized credit, and yes, you can even buy some of the emerging markets that are out there.
Well, let's talk about EM and finish there, shall we, Bob, since you brought it up. It looks like a mess right now in select parts of emerging markets. We've seen several central banks need to hike over the last week still to come. Where do you like and why?
Well, yeah, I mean, exactly. And they're reflecting the term emerging markets. They will come with some problems. It looks like it was a little bit early at the start of the year to go into emerging market debt markets and currencies. And the theory was that as the developed markets recovery, the emerging markets would draft off of that. And it looks like they're a little bit further behind, so the dollar probably holds in here. It doesn't mean that you can't go into some of the higher yielding emerging markets and start buying that debt with high real yields. Maybe this time you'll fund it out of euros instead of dollars.
Well, but John raises a really good point. It has to do with emerging markets, which is it a time to reach for yield if the Fed is beginning to hint at their normalization process, as you said?
I think it is. I think you have to still go where there are high real yields. You still have to go where there's opportunity to make some return on currencies. Every emerging market isn't exactly the same. Turkey this week is clearly different than a lot of the other emerging markets, particularly the Asian emerging markets. So I think you've got to roll up your sleeves and get in there. Yeah, yields aren't as high as we would like them to be. The story's not as clean as we might like it to be, but you still have capital to put to work.
It never is, Bob. And isn't that the story? We've talked about this so much, that all the naysayers in fixed income, whether it's credit, wherever it is, everything they say was true 6 months ago, 9 months ago, and here we are. What do you say back to them, Bob?
I say I'm sympathetic. I don't really like buying high-yield debt at 4.5% or bank loans at discount margins of just over 4%, but I know default rates are coming down a lot from where they are. And when we look back at high-yield credit spreads, they don't widen when default rates come down. So I think credit spreads are going to come in. They'll come in from 325, 350 basis points towards 250, 275 basis points. That will absorb a lot of the backup in the government bond market.
Bob Michael sends you his sympathies. Bob, it's good to catch up. Bob Michael there, JP Morgan Asset Management Chief Investment Officer. Just getting some news from a statement from the opposition party in Turkey that I want to bring to you. The opposition party in Turkey submitting a bill to Parliament on Tuesday that bans firing central bank governors, allowing them to complete 5-year terms. Now, worth, of course, pointing out that the president's AK party, the ruling AK party, and their ally command the majority in Parliament, so no idea where this goes, Lisa. But there's some pushback, politically speaking, as you might expect in Turkey this morning.
Given the fact that their currency is rolling over and the fact that they're going to see big inflation if they don't get it under control, and the fact that there are some reports of banks having to get rid of some of their lira holdings and try to get it into hard currencies, yeah, I can imagine they'd have political pushback, John.
A 10% move on dollar lira this morning. More coverage still to come from New York. Let's get a broader price action for you. Equities up, bond yields down. Seen this movie before. It's playing again this morning. Yields are in 2-3 basis points on 10s to 169. Granted, we were down around about 5 basis points about an hour or so ago. So yields have come in since then, pushed a little bit higher off the lows. Yields in, stocks up 0.2% on the S&P 500, and the Nasdaq still positive too. We advanced there about 0.7%. The story still to come through this morning and into tomorrow and into Wednesday. Chairman Powell and a ton of Fed speak as we tee up some important supply as well. A 7-year issue from the Treasury coming, I believe, Lisa, on Thursday after a really messy 7-year issue just several weeks ago.
Yeah, this is the first process in normalization. Those are the words of Bob Michael. We'll be watching.
From New York City this morning, good morning. Up in the next hour, Heather Boucher, member of President Biden's Council of Economic Advisors. Looking forward to that. We'll catch up with Heather in about 30 minutes time or so. Your S&P 500, 390625. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. A clinical trial could pave the way for the U.S. to approve the use of the AstraZeneca coronavirus vaccine. The trial was found 79% effective in preventing the disease, plus an independent monitoring board identified no safety concerns. The Astra vaccine has faced numerous setbacks, most recently over possible side effects. In Germany, Chancellor Angela Merkel has proposed keeping lockdown restrictions in force for another 4 weeks. Coronavirus cases have risen above a level that may prompt government action to avoid healthcare overload. Merkel and regional government leaders will discuss their options today. China is describing the first face-to-face meeting with the Biden administration as useful. Beijing called for more discussions after a tense start to talks last week in Alaska. The U.S. accused China of human rights violations, whilst China said the U.S. was running a flawed democracy. Beijing says the two countries did agree to form a working group on climate change. And billionaire Leon Black is leaving the private equity firm he founded a few months ahead of schedule. Black is giving up his roles as CEO and chairman at Apollo Global Management. He says he's leaving now for health reasons. Black had been under fire for being the main client of the disgraced financier Jeffrey Epstein. Another Apollo co-founder, Mark Rowan, will become CEO. The new chairman will be former SEC Chair Jay Clayton. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Percent of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
trading revenues coming in better than expected, everything. Cash, $1.4 trillion of cash, one of the most notable aspects of this report that was stellar.
We're going to see an extremely strong year, and I think that strong year is going to lead to price pressure. Some of that price pressure is going to be because we're rounding over deflationary comps from last year. I think you'll see price pressure this year.
The base effects.
I want to emphasize, inflation's not a one-year phenomenon, it's a multi-year phenomenon.
The base effects, I'll get there early, I'll do it again. The base effects we're going to kick in the next couple of months. That's going to be the story. Tom Barkin, Richmond Fed president there, speaking to Bloomberg from New York City this morning. Good morning to you all. Alongside Lisa Abramovich, I'm Jonathan Ferro. Tom Keene back in the building this coming Monday. Let's touch on the price action for you very quickly. We look like this on the S&P 500. Futures are firmer by 7 points and up around about 0.2%. On the NASDAQ, up by 0.7% and up about 86 points. Yields come in 2-3 basis points, just south of 170 at 169.46. I'll say it for a fifth time, Lisa. The base effects will be kicking in the next several months, and this is highly predictable. What is not is how people will respond to it when we actually start to see the data in the months to come.
Yeah, the idea of, has this already been baked in, or will there be sort of a buy the rumor, sell the news? I mean, you talk about July 4th being the moment when we can see whether actually people are going out and spending on experiences or not. I don't think we really have to wait that long, but certainly there will be a sort of reality check at some point later in the year, John.
Joining us now from DC, not on monetary policy, I'm pleased to say. You can take a break from that because we will hear from Chairman Powell repeatedly through the week, together with a ton of Fed speak. Kevin Cirilli, Bloomberg Chief Washington Correspondent, joins us, and everything else going on. And Kevin, I started the program with this a little bit earlier. The president's health, is he okay after that fall last Friday?
Yes. Look, I think that the White House has said that he maintains to be in good health. But look, I think it speaks to a larger question about fake videos and imaging and social media that both administrations have had to deal with. I'll be candid with you. As someone who drinks a lot of coffee throughout the day, I trip over my feet, Jonathan. You know this, and Lisa as well, multiple times a day. I didn't criticize former President Trump. I'm certainly not going to criticize President Biden for taking a tumble. But wow, did look like it hurt a little bit.
Not looking for you to criticize the President of the United States this morning, Kevin. Do want to focus on policy, and we mentioned earlier as well that it wasn't the President making the headlines in the last week around China. It was Secretary Blinken. On Russia, it was certainly the President, and the administration has made some waves over this past week. More waves still to come this week?
Yes, especially as President Biden will likely, as well as others in the administration, likely be asked about it. I know that everyone's going to be watching to see what Fed Chairman Jay Powell has to say this week, but also take a look at Treasury Secretary Janet Yellen, who is set to testify before Capitol Hill about the pandemic relief effort. However, I do think that she could face some questions from some members of the respective committees on China, especially on supply chain diversification. That was one thread that has emerged over the past month. A bipartisan consensus, and candidly, I think the administration is trying to link to the economic recovery.
Well, and frankly, this is a huge issue very much in the front and center for the likes of Samsung, for the likes of even Apple, as the chip shortage gains steam. And there's this concern about how quickly we can get those supply chains fortified and who is going to be at the heart of those supply chains and getting the money. I mean, what is President Biden doing to support particularly the chip and semiconductor industry, given what we're seeing in the disruptions that have been ongoing?
So two things. First and foremost, in terms of the timetable for what the Biden administration is going to be doing, I would anticipate that sometime in early summer, you could start to see some more technical developments, whether they're WROs or other types of areas that the Treasury Department or even the Commerce Department would be able to regulate internationally. But then secondly, and this is important, from the Republican perspective, this comes down to permits, as well as whether or not the permit process to get rare earth minerals domestically to support manufacturing in the United States is going to be able to come to fruition. Republicans that I've spoken with over the past couple of weeks, ever since President Biden signed those executive orders, they say to me that they feel that there are enough rare earth minerals here in the United States to make a dent in some of the global diversification of supply chains, but they've got to clear up that permit process.
Is that really the issue, Kevin, or is it also just the investment in U.S. plants and in U.S. jobs for people to be actually assembling some of these chips, assembling some of these parts? Is this really an issue of natural resources?
Well, Lisa, they say that they have the resources, but that the permit process is just taking too long to get approval. So it's a timing suggestion. They're making the case that they've got a pile of red tape in front of them that they can't cut to the chase and get to the bottom of it as fast as they would like. Look for Democrats in Michigan, like Congresswoman Haley Stevens out in Detroit and those more centrist areas of the country in the heartland to see where those Democrats come down the line. Also look at the Texas Democratic Coalition to see where they fall. This is a much more nuanced approach than I think than just left versus right. I think that the centrist wing of the Democratic Party, especially on manufacturing, is going to play a role here.
Kevin, let's wrap things up with just a word on the pandemic and vaccinations and vaccines. Just some news crossed on a Bloomberg I want to bring to our audience. The EU is open for discussions with the UK on AstraZeneca vaccines. We learned earlier this morning in phase 3 trials for the AstraZeneca vaccine here in the United States, 79% efficacy, 100% efficacy against severe or critical disease and hospitalization. Kevin, there was a concern several months ago that we could see vaccine nationalism really start to take hold. And there's been pressure on governments that have secured supply, the UK, the United States, to maybe distribute some of that to the rest of the world. What have we seen from this administration in the last couple of days?
President Biden has said that sometime soon, he didn't really specify a timetable as to when the United States will be distributing the surplus. Can you believe we're actually saying this? The surplus of vaccines from the United States. It's great. It's a great spot to be in for the United States to other countries. I'm struck and thinking of programs that have already happened in recent U.S. history, like PEPFAR, for example, and what the United States was able to do with African countries, and I think that the foundation and the bedrock of that already exists, but no doubt is going to be a nonpartisan issue.
It's a high-class problem for America to have right now, that's for sure. Kevin, it's good to see you. Kevin Cerulli, Chief Washington Correspondent, and of course host of Sound On Bloomberg Radio weekdays at 5 p.m. Eastern. As we often do, Lisa, let's go through the numbers. 2.49 million doses per day over the last 7 days, 124 million doses in America, enough for 19.1% of the population coverage, 124 million doses given. Just quite phenomenal.
I'm still waiting to find out, though, when we end up with some of these vaccinations being opened up to the general public. And there's not really a sense of the timeline there, John. And I think that a lot of people are getting antsy trying to figure out what the real timeline is if there really isn't a cohesive rollout plan throughout the states. Doesn't Ohio already have a free-for-all?
Making a move to, we've seen several states do that over the last couple of weeks. The president's put a line in the sand of May 1st. States are going their own way, as they have done throughout the whole of this pandemic, and just the character of this system, that's how it works. You know that better than I do, Lisa. The president can draw a line in the sand, states will go it their own way.
And frankly, people will go their own way, too. I really am also struck by what's happening in Miami. Have you seen those pictures on the beach?
Oh, they're not waiting for July 4th. Let's be clear about that. The president, July 4th, you might be able to get together. No. I don't know many people waiting for that either. Coming up, Peter Hooper, Deutsche Bank Global Head of Economic Research, as we look at an American economy that is set to boom in the year ahead. What happens the year after that? The year after that? From New York, this is Bloomberg.
can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Hello traders, hope you're okay. I'm going to place an order to buy a British pound. The price I'm looking to buy, 138.60, 138.6. Okay. This is what I'm looking for. So if you're looking to trade British pound, here is your chance. You can place an order and you can buy right now, because we received confirmation that it's time to buy British pound from our trading signals. Okay, I'll speak to you later, guys.
Explain. Think of this, I guess, as a little bit like Jay Powell being the lead singer and everyone else on the Fed is the chorus, and we get to hear from the chorus this week. Some of these are going to be about other topics, like Randy Quarles today is talking about LIBOR. Lael Brainerd is tomorrow talking about climate change, but she's also going to talk about the economic outlook. A lot of people laying out their views, which we hope, or which they hope the market will take as listen.
Great news, as you can see, position opened on British pound at 138.60. Okay, all of you who managed to open position, well done. So keep follow my trades, and I'll let you know what we're going to do next. If you got the strategy, if you already know what to do, I don't have to tell you, because you're already professional day trader. If you don't, you can get our strategy from our website, or you can get it. You can find it on the line. That's a red-colored line where the address of our strategy, and you can get it from there, and you can trade different pairs. Okay, I'll speak to you later, guys. Stay safe.
Congress. And then finally, this week, we have some auctions of 3s, 7s, 3 5s and 7s, and they're about 60 billion to 62 billion each. And of course, the 7-year is going to get the real interest of the markets, because it was so weak, the weakest auction ever of 7 years last month. And so the market's going to want to see, do we still have a problem there? A lot of people say maybe it was just Japan repatriating, not buying as many treasuries, because it's the end of their fiscal year in March. We'll get a much better view this week. We'll have a much better picture, guys, of where the Fed is and where they think the economy is going.
Just speaking of a better picture, the February Chicago Fed National Activity Index just out, Mike. First decline since April 2020. Not exactly in line with some of the boom data we've witnessed elsewhere. What's the story?
The story there is basically that this is a manufacturing area that is heavily dependent on the auto industry. And what's happening in the auto industry? They're closing down assembly lines because they can't get the computer chips needed for the cars. So that's one reason we're seeing a decline in that area.
There's a question on a broader level here, Mike, that I'm struggling with as we head toward a Fed chair who's going to try to reiterate his message from last week. And it goes to Bob Michael's point that they are taking the first steps in normalizing policy. Do you think that checks out? Is that what they have done with basically saying that they're not going to continue with this exemption for the supplementary leverage ratio, as well as some of the other comments?
I think that's a bit of a reach, Lisa, because the Fed at the same time announced that they're going to be considering ways to tweak the SLR. There's a feeling that they will take reserves out of the equation ultimately, and that's the cash that banks store at the Fed, and that would make a big difference in the calculation of the SLR. So there's a feeling that they are not going to be normalizing. They're just going to be changing the policy. And they want to show that banks have enough strength right now that they don't need that additional exemption.
Mike, always great to get your thoughts on a program. Busy week ahead. Michael McKee will be staying close and joining us through the week, particularly on that issue this coming Thursday. $62 billion worth of 7-year debt after a really messy supply of that particular maturity a number of weeks back. Joining us now is Peter Hooper, Deutsche Bank Securities Global Head of Economic Research and Chief Economist as well. Peter, great to catch up with you. Let's just start on this. Big growth this year, boom time. Everyone agrees with that. The deceleration for me is the story. 22, 23. How severe is that deceleration?
Well, John, you're certainly going to see less fiscal push than you have this year, no question. You're coming off a huge influx of fiscal support for families, households, which will be dropping off. But we also have some infrastructure spend waiting in the wings. We are going to have a pretty sizable package that'll be multi-year, and that'll deflate some of that. But, I mean, you have enough going on this year to push the economy well above potential. And even with the slowdown next year, slowing down from what we think of 7.5% growth this year to something closer to 2.5%, 3% next year, you're still above trend next year. It will be lower, but you're going to still see a very, very strong economy, even with this deceleration coming.
Peter, how are you factoring in potential tax hikes into your calculations?
Lisa, we're all waiting to see what's coming next with this infrastructure package, with the taxes. The assumption we're making, Matt Lazzetti and team, our U.S. economists, basically we'll get something like a $2.5 trillion spending package, and about half of that will be offset with taxes. The taxes, as President Biden's been saying all along, will be on upper income households, no one less than 400,000 hit, et cetera. But it's roughly a half of it offset. In terms of the extent to which those increased taxes are a drag on the economy, that's reduced because hitting upper income households, they tend to save more, and the tax increase is going to have less of an impact on their spending.
So do you think, Peter, that people are underestimating the inflationary impulse potentially coming from that spending that will not be entirely offset or even half offset by tax increases, but will increase and continue to increase the Treasury supply?
Yes, no question that you are going to see debt continuing to rise. I mean, on the inflationary impact, our baseline assumption is that the Phillips curve, the relationship between unemployment and inflation, remains very flat. You don't have a lot of pressure coming through there, and that inflation expectations remain pretty well contained. But there is certainly a growing upside risk that with all this stimulus coming, with consumers coming back on board, with the extra fiscal stimulus this year and continuing next year, and with a tremendous amount of household saving built up. I mean, all this support that we've gotten has not been spent. A lot of it's been saved. You have huge pent-up demand. This is going to push the economy above potential. We are going to see unemployment getting down, we think, into the low 4s by the end of this year, into the mid 3s. The risk is we could go into the 2s on unemployment over the next couple of years if all this stimulus has extra multiplier effects, if a lot of what's been saved up, households come back and spend, that could push us into a level of overshoot on the economy, overheating, if you will, that could get inflation ignited. As happened back in the mid-1960s.
That's certainly dominating the conversation right now, Peter, that it has happened before, it can happen again. But Peter, right now, that's the dominant concern. I'm with you, I get that. I catch up with Mike Collins of PGIM a little bit later, though, and I'm going to tell you a preview of the conversation we'll have. He's seriously thinking about the risk that by the time the Federal Reserve thinks about hiking interest rates, it's too late. And not because inflation's surging, but because the numbers are going the other way. That growth's decelerating, that unemployment has bottomed out, and the Fed can't hike and won't hike, maybe, I emphasize maybe, for the whole cycle. Peter, do you think that's possible, that we could get to the end of this cycle, which might be shorter, and they've got no room to cut because they never moved?
Well, I think to end the cycle, you're going to probably have to see some Fed tightening here. I don't think that the drop-off in fiscal is going to be enough to give us anything like a recession. But I think the risk here is the Fed has shifted. We're in a new monetary policy regime. The Fed has said, look, we're not going to be tightening just because inflation is getting slightly above target, or because the unemployment rate has gone into the 3s or perhaps even the 2s. They're not going to raise rates until they see actually inflation moving upward into the toward 2.5%. If it's there with some momentum, that could be a tricky situation.
It could be tricky.
They say they have the tools to deal with it. The tools mean raising interest rates, and that could be painful when it comes.
I guess what I'm trying to get at, Peter, is whether you think they could miss the turn, and we could have this situation like we've seen in Japan, like we've seen in Europe, that we get beyond the boom time, we get back to trend growth, and the numbers start to shift the other way, and the Fed doesn't have a reason to move.
Well, okay, so the question is what's going to shift things the other way with all this ammunition in household saving, with infrastructure spending still coming down the pike? Yes, it's possible if something negative happens there, and the Fed, it is conceivable that we could get through this into the next downturn without any move in rates. That's pretty unlikely, though.
Peter, we'll have that conversation again and again and again for the next several years, I'm sure. Peter Hooper of Deutsche Bank Securities, thank you, sir. Lisa, you're aware that's the conversation that's out there, and Mike McKee went into the news conference last week with Chairman Powell, and we talked about this. He basically asked that question, and they played the elevator music over the top of him, and the chairman said he couldn't hear him, but that was the question, and that's a conversation we need to have too.
Yeah, this idea that if you have a faster boom, you have a faster bust as well. And then what, especially if the Fed is late to move? And I guess the Fed just keeps saying, look, we're not worried about that. We are not worried about inflation. It's been undershooting for a long time. But that's a huge shift, John. The idea that they're not worried about inflation and the implications of that are pretty significant.
Yeah, I don't know if they need to be worried about it. I guess that I don't have a view on that right now. I think we can talk about the balance of risks around that story, and people will come on this program and advocate one way and advocate another. I guess what I'm pondering is what happens beyond the next 3 years if they haven't made a move like they said they won't make a move, and we've seen the big boom already. The boom's behind us, and you start to consider what the rest of the cycle looks like. And if it's low trend growth and low inflation, is that an environment that you hike interest rates in?
At that point, fiscal policy has to be the first responder, not the one that lags behind. And I think that perhaps that's a situation that the Fed will ultimately be more comfortable with politically, because that ultimately is what is going to address the potential issues. And I think that might be increasingly the conversation, John.
In the next hour, I'll catch up with Mike Collins of PGIM on this very topic. And then Ashish Shah will be joining us, Goldman Sachs Asset Management Fixed Income Co-CIO and Head of Corporate Credit. A lot to discuss in fixed income on a week where you get a lot of Fed speak and Chairman Powell repeatedly Monday through Wednesday. Lisa can't wait. Tom was so excited he took the week off. From New York, this is Bloomberg.
With the first word news, I'm Ritika Gupta. The European Union is on the verge of halting coronavirus vaccine exports to the UK. The bloc is risking a sharp downturn in relations with London to try to turn around its lackluster vaccination campaign. The EU will likely reject export authorization of AstraZeneca vaccines to the UK until the drug maker fulfills its obligations to the EU. Miami Beach is extending an emergency curfew for up to 3 weeks. The move came a day after police were overwhelmed by late-night crowds and made scores of arrests. On Saturday night, people on famous South Beach ignored social distancing and mask guidelines whilst celebrating spring break. Police used pepper balls to try to get the crowd to break up. And Goldman Sachs is saying that U.S. stocks are taking President Biden's tax plans in their stride. In a note, Goldman strategists say that stocks are pricing in the good news around infrastructure and showing little concern about tax hikes. And President Biden says at some point he'll visit the U.S. border with Mexico, where the number of migrants seeking entry has risen sharply. The influx of border crossings has become a political liability for the Biden administration. The president has reversed many of Donald Trump's hardline immigration policies. And new analysis says that Netflix is losing out on billions of dollars a year in revenue because of people sharing account passwords. According to Citigroup, password sharing costs U.S. companies about $25 billion a year, and the bank estimates that Netflix accounts for a quarter of that. Netflix has announced it's cracking down on password sharing. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We know we're going to have a good economic backdrop. The problem is it raises concerns about policy. And when you have concerns about policy, that's when you get volatility in the markets. But let's remember, this is what we all hoped for a year ago. And we're seeing earnings improve, the economy improve. I think inflation pressures will rear their head, but I think they ultimately fade as we move out beyond 2021.
That That was Brian Levitt, Invesco's global market strategist, speaking on the key debate in markets right now. Inflation, will it pick up materially, and will that pickup last for a prolonged period of time? Right now, this is a joy, to quote Tom Keene, to channel his energy, his spirit animal this week, when he is off. Heather Boucher joining us right now, one of the key people as part of President Joe Biden's Economic Council, helping to shape policy in the now and what will come later this year. Heather, thank you so much for being with us. I want to start with messaging around the stimulus that has been passed. Do you feel like the amount of money that has been passed has already trickled into the system, that people are aware of what the benefits they could potentially get will be and have been?
Well, that's a great place to start, Lisa. Certainly, I think everybody is aware of the checks, right? We know that over 100 million checks have gone out to the American people already, and I think people understand that that money is coming. But, there's so much more in the package to help people and businesses and communities all across this country deal with the pandemic and deal with the economic crisis. There's an increase in nutrition aid for the Women, Infant, and Children's Program and the Supplemental Nutrition Program. There's actually also money out there, about $4 billion, to help farmers of color who are in debt because of the pandemic and are struggling. So there's a lot of different pieces out there for different communities that have been greatly impacted by the pandemic.
Heather, a lot of people are looking at the stimulus passed for tea leaves as to what to come. And John Farrow has actually raised this on a number of occasions, this idea that $110,000 is an annual income that's being defined increasingly as heavily middle income, the idea that that is actually justification to get some assistance. Can you talk a little bit about whether that's a significant number, that is middle class, middle income, whereas $400,000 is upper class?
That's a great question. And, as an economist, I've spent a lot of my career with folks trying to define what is middle class and what's at the bottom. And what we've seen over the past year during this crisis is, we've talked a lot about this K-shaped economy. And we've seen that for folks that, earn, individually about $50,000 a year or less, that really is the dividing line between the kinds of jobs, the experiences people have had, the experiences with hunger and food insecurity. And so you double that, and that gets to a family income that gets closer to about $100,000. Looking across the country, in some parts of the country, that's a lot of money. In other parts, that's not so much. And I think what's important here is that we really recognize that folks at the top have been able to maintain their incomes for the most part, their jobs, assets have been okay. So they have been less hurt. And really it's those folks in the bottom third, that bottom part of the K, that have been hardest hit by the pandemic and are struggling the most in this recovery. So I think it's right to focus on that. What matters less is the exact, cutoff that matters for each and every program. We don't need one same cutoff for everything, but we do need to keep our focus on how the economy looks different at different parts of the income distribution.
And definitely from an economic perspective, it's important to have this sort of holistic look at which areas got hit hardest. From a numerical standpoint, certainly when crafting taxes, that is what matters to a lot of people because it determines whether they will be paying higher or lower taxes. $400,000 a year in annual income has been pegged as the number where taxes start to go up more significantly. And there's a question of whether this is for an entire household or whether it's for an individual. Do you have clarity on which it is?
Well, at this point, the president made clear time and time again on the campaign trail and through governing that if you make less than $400,000 a year, your taxes won't go up. Now, all the details are still to be worked out. This is an ongoing conversation, so I can't speak to specifics at this point. But what I can tell you is that he's been clear on that commitment and that number is incredibly far up the income distribution. We are looking at folks just at the very, very top of the spectrum.
There's also a question more generally on the lower part of the spectrum of whether we just experienced modern monetary theory in practice, this idea that you send checks out to the bottom quartile, the bottom third, and that actually is the money that gets spent and that goes into the economy and generates growth and inflation that's positive. Is there something or any proposal about some sort of universal income or universal checks to be sent out for that purpose on an ongoing basis?
Well, it's interesting you would ask that question. Already prior to the pandemic, we had programs like the Earned Income Tax Credit that provided a tax credit to families at the very bottom of the income distribution, families with children. What happened as a part of the American Rescue Plan is we expanded that to folks that didn't have children, and we expanded the child tax credit, giving money to families with children, significantly ramping that up for families at the very, very bottom. So those kinds of policies that are focused on those who need it most certainly are ones that we have a track record of doing in the past and seem very popular to the American people.
Heather, there have been a number of people who have criticized the $1.9 trillion stimulus as being too big, given where we are in the pandemic and the economic cycle. What's your response to that?
Well, we built that plan from the ground up to focus on the challenges facing our society and our economy right now. We know that this pandemic is still raging across the country, across the world, and that families and businesses and state and local governments needed the resources to be able to address this pandemic and weather this crisis. Get us to the other side. Make sure that those businesses could hold out, those families could hold out until those jobs come back. I think sometimes we forget that we've actually seen 52 weeks of record high claims for unemployment benefits. This economic crisis isn't over. And because, while we're doing everything we can to contain the pandemic, get vaccines out, the shape of the virus is still uncertain. We don't know if new strains are going to come up or, how that's going to play out. So we need to make sure that families are prepared, that communities are prepared. And so that is why this package was the size that it was.
Heather Boushey, thank you so much for being with us. Heather Boushey is a member of President Biden's Economic Council, discussing some of the plans coming up, and also she is the former president and CEO of the Washington Center for Equitable Growth. And some headlines crossing talking about vaccine nationalism and how Johnson in the UK was encouraged by the fact that the European Union does not want to see a blockade from the AstraZeneca vaccine into the United Kingdom. He also said that a third wave of COVID in Europe is likely to reach the United Kingdom. This seems like the outlier risk. A lot of people have shrugged off the idea that we could get some sort of resurgence yet again with some of the mutations of the coronavirus 19 virus, but especially as it spreads, this has been a concern. Meanwhile, in markets, what you see is a NASDAQ that is outperforming as yields come down. NASDAQ up 96 ahead of the open, the Dow up 6, and you can see yields off their earlier lows, but still definitely bid into ahead of a week of $206 billion of Treasury auctions. I'm Lisa Abramowitz, Jonathan Farrow on the open in a couple of minutes. Tom Keene back next week. This is Bloomberg Surveillance.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Okay, guys. Okay, if you're looking to trade Bitcoin, here is your chance. I'm looking to buy Bitcoin, and the price I'm looking to buy, let me else tell you. The price will be 57,435. Okay, so if you want to, this is, I'm placing an order to sell short at 57,435. Just right here. So this is the order to sell short. Don't get confused. At 57,435. Okay. So if you're looking to trade Bitcoin, it is your chance. You can place the order. It might take a while because many people, as I can see on level 2, placed an order, different type of orders. So I will not change color yet because the order wasn't filled yet. So as soon as it will be filled, we will change the color and everything. But if you're up to this, if you are welcome to follow this trade as well. Okay, I'll speak to you later, guys.
Credit default swaps posting the biggest jump on record earlier in the equity market. As you can see, they're sliding nearly 10%. If you're a foreign investor in those stocks, those foreign currency effects biting in a big way with those moves in the lira as well. And with that weakening currency, a huge chunk of the gains that were made under Ogbah's tenure have now evaporated. On November 6th, the day before he was appointed, the lira had hit a record low of 8.51 to the dollar. It recovered over the following 4 months as he attempted to restore some credibility, tighten policy. We sat around 7.22 on Friday after that surprise 200 basis point rate hike. All of that helped the lira to be the best carry trade currency this year. Obviously, that story now changing dramatically as people rush to sell. And with that rush, volatility has come back with a vengeance. John, if you hop into the terminal at GTV Go, you can see lira volatility spiking in a big way right now. 1 week in pride volatility has a 60 handle. The 1 month fall, which is that blue, is right around 43 or so. Both of those at the highest level since 2018, John.
Kelly, thank you. I feel like we've done this so many times before because we have actually done this so many times before. Let's bring in Michael McKee for more on this. Mike, winning back central bank credibility is a tough task. It will be tough for Turkey.
It's definitely going to be tough for Turkey. This is the 4th time we've done this in 2 years. Now, the people at the top of your show were correct. There are questions about what happens as the dollar rises, as the U.S. economy expands and yields rise, but not really about Turkey. This is not an independent central bank. This is all about keeping Mr. Erdogan in power. It's become a cycle. The government spends more, inflation rises, the central bank raises rates, running afoul of Mr. Erdogan, who believes that you fight inflation by lowering interest rates. Though inflation falls with higher rates, so does the lira, and the president fires the central bank governor. The latest, Naji Abel, after just 4 months as governor, as Kayleigh said. Abel's successor, Sahab Kavjole, is the 4th central bank governor in the last 2 years. The lira, meanwhile, goes on yet another round trip. Through much of 2020, it weakened as low rates and the pandemic spurred buying of imported goods. That led the bank to use its foreign exchange reserves to prop up the currency, at one point selling so much of its own reserves and reserves borrowed from local banks that it owed the banks more than it had in Forex reserves. Now, some say Abel went too far last week, raising rates by 200 basis points when, because he had some credibility with the markets, he could have gotten away with less. Now the expectation is that Kavjole will be cutting rates. Critic of the recent interest rate increases, he says the country needs to focus on growth. What does that sound like for a new cycle? So maybe more pain ahead for the lira, and the Turkish economy definitely means more volatility, as Kayleigh was pointing out. Another currency in the news this week, the dollar. It gets stronger and yields continue to rise, and so we have a lot of central banks around the world in emerging markets meeting this week. We'll get their view of whether or not they think it's going to be the kind of danger signal for their economies that a lot of economists think it may be, but it isn't related to Turkey. You can see there the number of emerging markets that are meeting this week.
The I word, idiosyncratic. Certainly some of the things we're seeing in Turkey more recently, idiosyncratic. Mike, thank you. Mike McKee there on emerging markets. We've had hikes from Turkey, we've had hikes from Brazil, and more to come still from Russia if you talk to the community who follow that story a lot more closely than I do. For more, let's bring in Michael Collins, PGIM Fixed Income Senior Portfolio Manager. You can lose credibility really quickly in this market, Mike. It takes a long time to rebuild it. How long does it take for Turkey to rebuild what it lost over the weekend?
Jonathan, I don't know if they ever had all of that much credibility to begin with, right? We've gone through this story with Turkey since Erdogan's been in power, really. When you have this autocratic ruler, you don't have a fully independent central bank, and that's been the case there. So I fully think, and I'm hoping that it is idiosyncratic and it does not spread to the broader markets. But man, you have to look at the big picture with rates going up around the world, not just in the developed world, but as you said, in developing countries. And this SLR removal and Turkey, you know, I mean, financial conditions feel like they've gone from being really loose to starting to tighten here.
That's what I wanted to sit on, Mike, because I think it's really important. It's actually quite straightforward to look at Turkey and say, okay, this is about central bank independence. To look at Brazil and say, okay, this is a country still overwhelmed by the pandemic. To look at Russia and say, okay, this is about US-Russia relations. But there is a thread that ties all three, and that's higher treasury yields and high yields worldwide, Mike, that are inconsistent with what is happening on the ground in some of these countries.
Yeah, I mean, obviously it's been an uneven recovery here. The U.S. and China, frankly, seem to be leading the way higher in terms of growth, Jonathan, and maybe parts of Europe are going to catch up here. The emerging markets seem to have been the laggards a little bit, right? They benefit from higher commodity prices, but they've been slower on the uptake with regard to the vaccine. But, you know, our view has been that the emerging markets will generally benefit from this huge uptick in growth we're going to see globally this year. But it is going to be really uneven for sure.
It's hard to say there are big signs of contagion this morning, Mike. I've got to say, the peso is weaker by 0.8, the Brazilian currency weaker by 0.8, the ruble weaker by 0.7, the rand's had a move of about 1/3 of 1%. Mike, for you though, does this just reinforce the bias that already pre-existed coming into this, which is just US-based investors who want to stay at home and witness the boom here in America?
You know, I don't know. I think our rates have gotten to the point, Jonathan, and I'm sure we'll talk a little more about rates here in the U.S., where they are bringing in capital. They are bringing in interest, right? We're starting to see the curve start to flatten here in the U.S. as people, you know, are chomping at the bit to buy higher yields, and the long end of the U.S. curve is providing that right now. But like I said, these yields in emerging market countries have moved up, you know, 50 to 500 basis points in Turkey in a handful of countries, right? So those higher yields will offer value for global investors.
Well, that's the story this morning. Yields are low, the Nasdaq's up 0.75 of 1%. We'll talk a little bit later in the program about whether that's correlation, causation, or just this reinforced narrative of the last several months, given what the price action has been. But if you've been a buyer of what's happened at the long end, Mike, I keep going to the guys over at PGIM, your colleagues, Robert Tipp, Greg Peters, and asking the same question. I know at some point you guys get together and say, we like 170 on 10s. We like in and around 250 on 30s. Are we there now?
Yeah, we are really close. We have identified, Jonathan, a 175 10-year yield as pricing in probably the rosiest scenario, what I call like the Fed's perfect world, right? That's a world where we get 2% growth, we get 2% inflation, we get an unemployment rate of 3.5%, and the Fed raises the funds rate to 2.5% and keeps it there indefinitely. That's what's priced into the curve when the 10 years at 175 and the 10-year forward last week hit 3.25 before bouncing off that, right? These are really big numbers. These are big yields. The break-even inflation rates that we've spoken a lot about in the past, we're kind of in the 2.5 plus range permanently, right? So there's a lot of tremendous optimism priced into these rates, and there is a lot of value there. The timing is a trick, right? Value is not a good timing tool, right? So we have stepped aside over the last few months, but you're right. We are right there waiting to get pretty aggressive in the back end.
175. I keep hearing these words, aggressive. Michael, what does aggressive mean in the back end? What is 175 doing it? 180? What is it?
Well, meaning you get long duration at some point, right? I mean, you don't want to step in front of a train, Jonathan, and rates have been going up and the curve has been bear steeping in a steady path, right?
Yeah.
And people are pushing it higher because of all the optimism. But at some point, the maximum level of optimism gets priced in and a realization kicks in that we're not going to have 6.5% growth forever. We're not going to have 2.5% inflation forever. And you get the treasury market and the equity markets will lead, right? So at some point, it's probably, as Robert Tipp said Friday on your show, it's probably going to be this quarter, right? Because by the end of the year, we might already see some of the euphoria around growth.
Well, that's kind of you, Mike, because I wasn't going to say when. I wasn't going to ask the when question. So it's kind of you to say this quarter. What is it about the signpost that you're looking for that will give you that conviction?
Yeah, you know, part of it is technical, right? You want to just make sure that the shorts are fully in the market and they cannot push it higher anymore. Part of it is these valuation metrics we look at, and the value is clearly there already from our standpoint. And part of it is you want to see some of the data maybe start to roll over a little bit. We had some headlines over the weekend. Our investment grade analysts reported that some of the big paper cardboard companies were not able to push through some of the price increases they were hoping to. It's one of the first signs we've seen, Jonathan.
Interesting.
Where maybe some of these price increases that everybody's anticipating may not actually come to fruition.
Mike, stick with us. Much more still to come on this market. Let's cross over to Taylor Riggs to get you some movers ahead of the opening bell. Morning, Taylor.
Good morning, John. And the story is similar to what we saw 2 hours ago with Kansas City Southern, right? The big outperformer up about 17% on a $25 billion deal from Canadian Pacific, an overweight now by JP Morgan with a 275 price target, cash and stock deal signaling confidence. AstraZeneca as well signaling confidence with that shot that is 79% effective. U.S. already ordering 300 million doses. But then you go back down to some of those travel stocks, John, with Carnival thinking, how do they get through another summer with the no sail zone? So how do you perhaps maybe do some ships out of other ports, right, to get out of the U.S. to avoid another dead summer? United Airlines trading down in sympathy with some of the European stocks as your UK and your EU cannot stop fighting. Let's flip up the board. What goes down goes up. Today it's big tech, right? Because yields are falling. So you get Apple, Microsoft, some of the big cap stocks rallying. So too do the chip stocks. Listen to this, John. Goldman Sachs saying that tech, of course, has been the big outperformer, but wait for it. It's fundamentally driven. Really strong earnings per share, nowhere near the extremism that you saw in the late 1990s.
Taylor Riggs, thank you. Much more from Taylor through the hour. Waking up early for us this morning. Thank you, Taylor. Coming up, investors preparing for another slate of Treasury auctions, plus an onslaught of Fed speak featuring Chairman Powell not once, but about 3 times, I think. That conversation up next with PGIM's Mike Collins and Goldman's Ashish Shah. Looking forward to that. 18 minutes away from the opening bell this Monday morning. Good morning to you all. Equities on the S&P 500 inching a little bit higher throughout much of this morning. Up 7 points. We advanced 0.2%. This is Bloomberg.
a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
We're going to see an extremely strong year, and I think that strong year is going to lead to price pressure. I want to emphasize inflation's not a one-year phenomenon, it's a multi-year phenomenon.
It is a multi-year phenomenon. That was the Richmond Fed President Thomas Barkin standing by Chairman Powell, downplaying inflation concerns on a week full of Fed speak. Mike McKee's going to cover all that. Morning, Mike.
Good morning, John. You might say that Tom Barkin was doing Jay Powell karaoke, reinforcing the views of the central bank chairman, who was speaking for the entire FOMC last week when he said, we are not raising rates early. We are going to carry out our new policy. Well, we do get a torrent of Fed speak this week. Some of it not on monetary policy, but a lot of it will be, and the message is likely to be the same. Do not expect a quick move by the Fed. We are going to probably focus most heavily on Jay Powell. Not that he's going to say anything new about the economic outlook, but he is going up on Capitol Hill with Janet Yellen to talk about the CARES Act, which gives members of Congress an opportunity to talk to him about how things are going with the economy and their fears about what might happen, because, of course, we've got this whole controversy now about whether this blows inflation out of the water. And you look back to 1960, when we started a cycle in the 60s of inflation. From 1960 to 1968, inflation averaged 2% a year, on target. And then look what happened after that. And that's the concern, that down the road we will suddenly see inflation accelerate. He'll be asked about that. And then the other issue, the Fed and its supplementary leverage ratio, the decision to bring it back after a year's suspension. There are a lot of questions about whether it is giving too big a break for the banks. You can see the impact on the biggest right there. And on Wednesday, he's speaking before the Senate Banking Committee, home to Elizabeth Warren and Sherrod Brown, two very vocal proponents of the rule. Fed says they'll be looking at adjusting the rule, maybe taking reserves out. You can bet there'll be questions about that. Wall Street will also have questions about this week's Treasury auctions and what will happen with the 7-year in particular. Remember, the last time the 7-year was sold, it had the weakest take-up ever. Maybe that was because the Japanese were repatriating at the end of their fiscal year and not buying, but Wall Street's going to want to know, is there a problem with the massive debt that we are selling now and acceptance of that in the markets?
$62 billion of 7-year notes coming to you Thursday. Mike, thank you. Joining us now, just an all-star lineup on fixed income. Ashish Shah of Goldman Sachs Asset Management, Michael Collins of PGIM still with us. Ashish, let's start there on supply. A lot of 7-year debt coming again. Do you have any concerns whatsoever about the supply slate coming through, not just this week, of course, Ashish, but through the rest of this year and beyond?
Look, John, there's a tremendous amount of supply coming, but given the backup of yields, I think that there's going to be an ample amount of demand globally for this slate. And, you can see it in kind of the market that, like, we've had this big move, but it's opened up a tremendous amount of steepness in the curve, which represents return for fixed income investors.
Ashish, it's easy for me to sit here and just ask a basic question, like, have we seen the bulk of this move? What would inform you as a market participant as to whether we have seen the bulk of this move higher?
Sure. So the things that we're looking at when it comes to this market is, one, value metrics that you and Mike were discussing earlier. We see a tremendous amount of value developing here in the marketplace. But the other piece of it is we have to remember the role that fixed income plays within investor portfolios. And so we've been watching asset markets, and as those asset markets evolve, and you've seen.
Okay, traders, great. Position opened on Bitcoin, short. We opened short position, right? Okay, we bought short contract. Well done, anybody who decided to sell short Bitcoin. Well done. Just to remind you that based on the Bitcoin trades, we don't make profit based on the pips. with Bitcoin, we make profit based on percentage-wise. So 0.1%, 0.2, and so on, 0.3, and so on. Okay? This is a bit different to pairs, Forex pairs, because Bitcoin provides us quite a wide spread, and it's kind of difficult to put pips-wise stop on profit. And other things, if I will put just a couple of pips profit, it won't be much profit. So we will calculate profit based on percent, how much percent we will make. Okay? I'll speak to you later. Everybody who entered this trade, well done, good for you. Look what's happened. It moved already down. So let's follow this trade. Speak to you later, guys.
And the growth in the that we're seeing in the economy, I think it's going to be well supported. Having said that, I think this backup actually affords a lot of return available for investors that want to take some chips off the table. They've made a lot of money on the equity side. And so, sitting here in Q1 saying, hey, I'm going to take some chips off the table in case there is a hiccup down the line makes a lot of sense.
How would you approach that question, Mike?
Yeah, we still like high yield, and we have taken down our overall level of credit risk on the margin here, Jonathan, over the last few weeks. And it's really a function of what we were just talking about, the tighter financial conditions. We're worried, like, how do these higher rates resolve themselves, right? One is just valuations become so compelling that investors jump back out on the curve. And it's not just retail investors going from loans to high yield, Jonathan. It's the big institutional investors, the insurance companies and pension plans. And we're already starting to see pension plans rebalance out on the curve, right? They are, their funded status has really improved with equities going up and interest rates going up. So they are definitely incentivized to rebalance. The other way it resolves itself is through, a risk-off environment that causes the Fed to step in and maybe start buying or at least jawboning long rates lower. And I worry about that risk-off environment that resolves these higher levels of rates.
Ashish, I wanted to go there on how you offset potentially some of these moves. And on the rate vol side, one thing that you guys have been doing, and many others too, is really focusing on your foreign exchange exposure. How are you managing that dynamic at the moment, Ashish?
Sure. So we've been taking a pretty light view of FX risk in our portfolios. We just think that there are a lot of points of opportunity in the rate curve and global rate curve, and that FX isn't offering nearly as much kind of opportunity. That'll open up. You see the moves that we've seen today, added volatility in the EM space. As kind of that space plays out, we think that there are a lot of opportunities that are going to develop on a forward basis.
We're talking about the short-term issues here, potentially the medium-term issues too. I want to finish on a longer-term issue with you, Mike, and it's a thought about the length of this cycle and potentially the possibility that the Federal Reserve just never raises interest rates through this cycle. Mike Collins, do you think enough people are thinking about that at the moment?
I don't think anybody's thinking about that, Jonathan. As you know, we think that's a reasonable probability. I talked about what's priced in now, which is the Fed's perfect world, right, of permanent higher growth and inflation. And I worry about the other scenario. Remember last cycle, it went on and on and on. I kept thinking, when are they going to hike? If they don't hike soon enough, they're not going to be able to hike. And this cycle, the reaction function is going to be even slower. Yeah. So there's a really good chance we're sitting here in 3 years from now, they haven't hiked and the economy's rolling over, and they get stuck at zero like a lot of other central banks.
Like Europe, like Japan. Guys, you were great together. Let's get you back on soon. Ashish Shah, it's good to catch up. It's been way too long. Alongside Mike Collins, thank you. Coming up on the program, the analyst action you need to know. That'll be next in our morning calls. And later, travel stocks feeling the heat over in Europe as vaccine tensions continue to build. That conversation still ahead with TPW's Jay Pawlowski and Washington Crossing's Kevin Karen. This is Bloomberg. A little more than 4 minutes away from the opening bow this morning. Good morning. Futures up 7. We advance 0.2%. Let's get you some morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin with B of A. Downgrading Snap to neutral. $67 price target. The analyst citing valuation and rising interest rate concerns. Your second call from Evercore. Upgrading Dollar General to outperform. The analyst signing a number of near-term catalysts, including the American Rescue Plan and the company's margin expansion initiatives. And finally, Benchmark raising its Viacom CBS price target to 120. The analyst expecting the media company to exceed consensus estimates, with tailwinds stemming from its streaming video service. We advance there by 0.7%. Up next, the reopening trade back under pressure. From New York City this morning, good morning. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash. $4 trillion of cash. One of the most notable aspects of this report that was stellar.
25 seconds away from the opening bow, looking to snap back here on the S&P 500 futures, slightly positive. Your outperformance on the NASDAQ up 0.7%. You are familiar with this story by now. Bond market does its thing, NASDAQ does its thing. Is it correlation or causation? We'll talk about that in a moment. There's your opening bow. Switch up the board into the bond market. What a range on 10s. 174.77, the high of Friday's session. The low of today's, 166. What's it all about? Your 10-year, 168.75 right now, down 3 basis points. Your euro firmer, euro dollar north of 119 at 119.20, and crude up by 0.4% to $61.70. So that's the cross-asset story. At a market desk with your movers, let's get back to the wonderful Kriti Gupta.
Well, good morning, John. Let's just kick it off with some vaccine news. You are seeing the AstraZeneca trial in the U.S. show a 79% efficacy rate. Of course, we know that's coming off the back of those concerns over in Europe. That actually helping the shares today. Also in the green. Kansas City Southern rallying after Canadian Pacific Railway agreed to buy them for $25 billion in a deal that would link the U.S., Mexico, and Canada via a 20,000-mile rail network. Also in the green, Tesla, ARK Management putting a $3,000 price target on the stock, indicating a company value of, get this, $3 trillion. In the red, previously now in the green, was Apollo Management. Leon Black stepping down from his chairman role in addition to giving up being CEO. I also want to take a look at Airbnb. Those analysts saying staycations will become more likely and people can work from anywhere, that giving those shares a little bit of a boost. GameStop also rallying ahead of their first earnings report tomorrow since the Reddit mania began. And in the red, that is Turkcell, the dominant mobile phone operator in Turkey. Its ADR is under pressure in line with the drop in Turkish assets after its central bank chief was replaced, John.
A brutal move in Turkish assets. Critty, thank you. Let's start with the equity market then. Up 0.1% of the S&P 500 about 90 seconds in. Your underperformance from energy, from financials, the banks, the financials off by 0.6%. The Y in the bond market for the banks at least, that's for sure. The rotation, that's the story. It's dominated this program now for months. On top of that story, here's Taylor Riggs.
Thank you, John. And we take a look at NASDAQ 100, right? The big outperformer today as we advance, as you say, 0.8%. Interestingly enough, in the last 5 days, we're still up more than 5%, even as yields have climbed 10 basis points in that time period. It is the rate of change at which those bond yields move that allow big tech to digest what that means for valuations. Let's flip up the board. This is interesting. Tech relative to the S&P 500 looks near the late 1990s bubble, but Goldman Sachs coming out today and saying, well, tech has been the big outperformer, but fundamental earnings per share also look very strong. And so they think that we are nowhere near the extremism that this ratio shows going back to the dot-com bubble. Finally, if it goes up, some days it goes down. And today, of course, it is that reopening trade, despite some of the positive news that we're getting from AstraZeneca. Concerns still over the cruise lines. What does summer travel look like? Concerns over the airlines. Do we get international travel, or do we continue to see some infighting between the UK and the EU? So you are getting some concerns about U.S. airlines following some of the European shares lower today.
After massive moves. Taylor, thank you. Taylor Riggs there on the equity price action and this rotation that's just dominated the conversation on programs and networks like this one. Joining us now, TPW's Jay Pawlowski and Kevin Karen of Washington Crossing Advisors. Kevin, let's start right here. The equity leadership came from one place for the last 10 years. We've seen a change over the last 6 months. Kevin, does it stick?
Well, I think valuations are an issue. So for us, we've got the growth side of the equation at kind of the lowest expected return long-term than that we've ever had. The caveat, though, is that growth, tech, for example, very high quality balance sheets, very high strong cash flows. They've become a very good place for a core holding for a portfolio, but they've gotten expensive. So there needs to be a period of digestion, and that's why you're seeing this rotation out of low expected return growth stocks, which are expensive, into value. And of course, we've got a steep yield curve and better performing commodity prices. So for now, that seems to be the trade that's in place, and that's where we're overweight growth over value.
Multi-year move away from growth towards value. And I'll give you a triple play, John. The first is the fundamental case, which, as you know, I've been arguing for months. Vaccinations plus rising rates equal kryptonite for long duration growth stocks like big tech. Secondly, you have the technicals starting to suggest that long-term equity leadership is moving away from technology towards energy, financials, other value, cyclical plays. And then third, and I think very important, you have the quantitative side where JP Morgan and others are making the case that the momentum factor, which has been paired with growth for the last decade, as that chart just showed, is now migrating towards value. And I think that's going to give us the next leg up. So to me, we're in the second inning, maybe the third inning of a move towards value that will continue, as I said, through this year into next year and beyond, not only within sectors in the United States, but also geographically, in a shift of leadership away from the U.S. to the non-U.S. market.
So, Jay, you and I will talk about the international story a little bit later in the program. Can I pick up on the first point first? Mohammed El-Arian out on Twitter today raising the question that we've been talking about in this program too. the difference between correlation and causation when it comes to the NASDAQ and when it comes to the rate story. Jay, is that correlation or causation? And the reason I ask the question is because the correlation is clear. As things reopen, as growth looks less scarce, yields should go up, the NASDAQ should fall. Now, Jay, does one inform the other? Is there some causation there as well, or is this just a reinforced narrative of the last several months?
I think it's actually both, John. I mean, I think you have a case where clearly long duration growth assets suffer from rising rates. We are in a bear market, a secular bear market for U.S. Treasuries. Rates are going to go significantly higher. That's a good thing. We're getting off the zero bound. It means growth is recovering. It means consumer confidence is coming back, et cetera. And also you have the relationships. I mean, markets are built on relationships, on correlations. Yeah. And it's very clear how this is going to play out. It's been to the benefit of technology in the United States for the last decade. And now guess what? Other sectors which have been beaten down, nobody owns, no one's liked, they're cheap relative to history, regions no one's liked for years. Now we're going to get a chance to enjoy the spotlight.
So, Jay, some people might say, why does it matter if it's correlation or causation? At the moment, the outcome is the same. The reason I ask, Kevin, is because at some point, let's play this out. Let's say that the yield move tops out in the way of Michael Collins of PGIM talked about earlier on in this program. I'm trying to understand that if the yield move tops out, whether the rotation can continue without the participation of the Treasury market. Kevin, do you think it can?
Well, at some point it's going to become an issue, and specifically if we move, let's say we get the Treasury up above 2% to 2.5%. I agree with the other guests. We're going to have some very strong headwinds, especially for growth, and a lot of that shift that we're seeing into value is a defensive move away from concerns of problems potentially in growth as rates move higher. And then when you think about how banks finance themselves, for example, a big part of the value part of the equation, or energy stocks doing well, or even emerging markets as a proxy on value, because there's so much weight in commodities and materials and banks in emerging markets. You're going to continue to see this almost defensive trade. But ultimately, if the Fed, who is now using pro-cyclical monetary policy at a point where you've got relatively high asset prices and an economy that's roaring back, you could end up with some headwinds at some point for value. We don't think we're there yet. So the other thing you got to pair with this value idea is the idea of quality. So we want to own value, true, but we want to look at the quality of the companies that are in there and make sure that we're not exposed to, let's say, too much leverage.
And let me come back to the same question again, Jay, and let me put you on the spot just a little bit, Jay. Can the value outperformance continue if the Treasury sell-off stabilizes?
Okay, guys, are you ready to place stop on profit for Bitcoin? That's great. So the price, I'm looking 0.2%. It's equal 57,320. So this is where I'm going to place a stop on profit for Bitcoin. So whatever happened, we will have 0.2% profit for Bitcoin. Okay? Look, it nicely moved down, so I don't have to worry much. And probably for you guys, because spread quite big, you don't have to worry that you will not be able to place stop on profit. So as you can see, at this moment, we have stop on profit at 57,320. Let's see, 57,435 minus 1%. It will be 56,860. Let's go to 0.5%. 57,435 minus 0.5%. It will be 57,147. What about, okay, that's fine with me. Don't forget, guys, that we're trading not because we love stocks. We love stocks because they give us a profit. So we don't like to stick to one pair of stock because they're great. They are great always when they give us a profit. When people lose money, they don't really like them. Yeah. So we placed right now, we moved down stop on profit to 57,147. As you can see, I pointed out. So please do copy this trade. If you decided to follow my trade, don't play hero, don't hold like forever this pair, because anything can happen, especially with Bitcoin. So I advise you to, if you started following this trade, please finish following until the end this trade, okay? If not, if you have the strategy, you already know what to do. If you don't have the strategy is available on company.co.uk website. You can get the strategy. On Wednesday, after tomorrow, I'm going to have a webinar. You can register for webinar. I will spend 1 hour. A strategy will be included, and I will show you how I trade, what exactly you need to do, how to hedge stocks, how to do all tricks that I know in order for you not to lose any money. If you want to trade, of course, as a full-time day trader. Okay, guys, so we already, whatever happened, we're already 0.5% in profit for Bitcoin. I'll speak to you later. Stay safe.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse. Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP. But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
The vaccine is highly effective and very safe. We are very confident. Many regulators are very confident that the vaccine has been approved in more than 70 countries in the world. And our next priority, of course, is also to get this vaccine approved via an emergency use authorization in the United States.
AstraZeneca getting a vote of confidence from US trials with tensions brewing over the shot on the other side of the Atlantic. Let's head to London to catch up with Bloomberg's Guy Johnson. Guy, I spent the weekend trying to get a read on this. What's your read on what on earth is going on now?
The UK is racing ahead with its vaccination program. Nearly 50% of the population now vaccinated. That is extremely painful for EU leaders, as a result of which, John, there is a Thursday summit, now virtual, because of the rising case counts, to discuss maybe banning or limiting exports of the AstraZeneca vaccine to the UK. There's a mix of politics, nationalism, and science involved in all of this, John. It is hoped that the news out of the Astra trial that you were just mentioning in the United States will calm nerves surrounding the science and what is happening in the EU regarding the Astra vaccine. But nevertheless, with case counts climbing, lockdowns climbing, John, the EU needs to figure out a way of getting more shots in arms, and it needs to find a way, I suspect, in Brussels from diverting attention. Potentially starting a fight with the UK may provide some options there, but the potential for a lose-lose situation is already there as well. The UK does produce key ingredients, for instance, for the Pfizer-BioNTech shot. That could be limited. Boris Johnson over the weekend, according to the BBC, did speak to Merkel and to Macron. The hope is that this can be diffused, John, potentially with some deal on sharing out of a plant in the Netherlands. But nevertheless, there is still the threat this week that we could see a vaccine war break out between the UK and the EU, which I think would be highly damaging to both.
Well, Guy, let's talk about that. Do you have a sufficient understanding, you and the team in London right now, as to what would happen to supplies for the UK over the next several months if the EU went through with this?
It would have a meaningful impact. It would certainly push back, according to the Affinity data, the point at which the UK reaches its target for vaccinations by a few weeks. It would impact, according to the Affinity data, the EU by just 1 week. It would improve the situation by 1 week. But the danger, John, is that it then spreads into other areas of the supply chain. This is a global production process. The UK, for instance, produces key lipids, fats, that are used in the Pfizer vaccine, and I think the unforeseen consequence here could be quite significant. I think it would also be just damaging politically to both's reputation around the world, and I think that needs to be taken into the thinking here. Certainly, the Irish and others within the EU are keen that this doesn't happen. But with, as I say, lockdowns increasing and case counts and fatalities increasing, EU leaders are under considerable pressure, John.
Guy, no doubt you'll be leading with this near the top of the hour with Kayleigh Lyons. Looking forward to the coverage coming up in around about 13 minutes or so. Let's turn to this story of Europe versus the rest of the world, and not on the pandemic and not on the vaccine, but in the markets. This is a story coming from JP Morgan, calling for Eurozone outperformance and writing the following. The key consideration for the regional pecking order is the value growth tilt. Given the US bias to tech and Eurozone bias to value and banks, if banks are performing better than tech, then the Eurozone has a fighting chance to outperform. TPW's Jay Pawlowski is with us right now. Jay, this is your trade. Why does it stick? Why is it durable?
Well, I think, John, exactly as you just pointed out, people are starting to see the light, as it were. And, it's a good thing that as investors, we're investing in companies and in earnings streams and not in political decision-making and other issues, as you raised before. Look, I think there are three main divergences between the U.S. and within Europe and between Europe. First is the vaccination lack of success. The second is the divergence between growth recoveries. And the third is within the EU between manufacturing, which has done quite well, and services, which clearly have not. My view is that we are at the wides of all three of those divergences. And as they narrow, that's going to be bullish and support an already pretty encouraging earnings profile and valuation profile for Europe and for the banks.
Jay, it's been intriguing for me to witness that divergence that we've seen and the narrowing that you expect. Typically, what we'd expect to see is the divergence and the markets respond to that. The only channel I can see that happening right now is through FX. Euro-dollar's come down from 123. I think the lows were in and around 118.50. Jay, I haven't seen it in the banks trade. Banks have carried on ripping. Haven't seen it in the travel and leisure trade. That's done very well over in Europe more recently. So, Jay, can you help me understand that a little bit more? We've seen the growth differentials and the expected growth differentials arguably in your mind peak, but we've already seen the trade for narrowing start to develop over the last several months anyway.
Yeah, that's correct, John. You're absolutely right about the currency. Look, U.S. exceptionalism in terms of better vaccinations, better growth recovery supports the dollar. Global reflation, which would reflect a European recovery, is bearish for the dollar. So I would expect exactly what you just said to kind of reverse itself. And by the way, that gives this whole trade another leg up, and the currency will start to work for you as opposed to against you. And John, I think it's really a case of markets moving much more rapidly today than they have in the past. Really, the COVID speed that I've talked about, markets are discounting mechanisms and moving aggressively. And when you look around the world, European banks, even after the move, John, are still very, very cheap. European beats in the last quarter earnings were the best in a decade.
Yep.
The best in a decade, John. So companies have been able to work through the lockdown process. And when the consumer comes back in Europe, that's going to help the rest of the European equity market. And I'll give you one last sentiment indicator, John. Morgan Stanley held its European financials conference last week, virtually, of course. Attendance was up 50% year on year. In U.S.-based investor participation was up 100%. This trade is just the beginning. We're at the second or third inning, maybe the fourth inning of the European bank trade.
I love a selective anecdote to support the trade, Jay. Love it. Jay Pawlowski there at TPW. Great to catch up, mate. The banks have delivered for Jay, up 18% in Europe on the year so far. A little bit earlier on this program, about 10 minutes ago, I brought you some breaking news around the US and its allies and some Politico reporting. I want to touch base with our chief Washington correspondent down in DC, Kevin Cerulli, to update us on that. Kevin, what are you hearing? What's the latest?
Well, good morning, Jonathan. And just in the last several minutes, Politico reporting that the United States, Canada, Britain, and European Union allies will all issue sanctions sometime later today against China for what U.S. officials have called genocidal actions against the Uyghur Muslim minorities in the Xinjiang province of China. We mentioned earlier this morning how the rhetoric from Secretary of State Tony Blinken's travels to Alaska last week to meet with Beijing counterparts was likely to continue into this week. Well, here you go. And this is just the first step, the economic sanctions components likely to be made against unique individuals in China for their involvement in this. But it's the first step that they could take, but no doubt just the first step in what is surely to be a longer road ahead.
Kevin, any idea how targeted those sanctions would be?
Not yet, but once we have those developments, and they're likely going to start micro-targeted and then expand. That's what we know.
Okay, Kevin, stay on top of it. No doubt you will. Kevin Cerulli there down in Washington, D.C. Up next on this program, the market-moving events you need to be watching. That'll be next in our trading diary. And here's a hint. Chair Powell, and a ton of Fed speak in between. From New York, this is Bloomberg.
Somebody remember things that happened 80 years ago. How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability have our own Hong Kong version of specs. We remain very confident on the competitiveness of the Hong Kong stock market.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
25 minutes in, session highs on the S&P 500 up 0.4%. Your underperformance on the Russell, your outperformance on the Nasdaq up by almost 1 full percentage point. Yields come in. Bull flattener, 10-year comes down 2 basis points, 30-year in about 3 basis points, 170 almost on 10s, just south of that on a 30-year, around about 240, call it 241. That's the equity market and the bond market together. You're familiar with that story. Here's your trading diary. What you need to be watching through the week ahead. A ton of Fed speak, including Fed Chair Jay Powell and Treasury Secretary Janet Yellen testifying before Congress on Tuesday and on Wednesday too. On Thursday, it's Vice Chairman Rich Clarida's turn, plus President Biden holding his first formal news conference, some much-needed Q&A with the administration a little bit later this week, plus $180 billion in Treasury auctions throughout the week, including that important 7-year issue a little bit later this week, and rounding out the week on Friday with U.S. personal income and spending numbers as well. From New York City, for our audience worldwide, this was the countdown to the open. Continue the conversation on Twitter at Faro TV. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan, and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look into him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
after maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things of life happens. Yeah, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
Okay, guys, well done. As you can see, we closed trade on Bitcoin. All of you who followed this trade, you made quite a decent profit. In our case, we made £500. So in your case, it's all about how much profit you decided to make if you will be in 0.5% in difference in profit. Okay, a good trade, everybody. Well done. If people doesn't know how it's happened, why we decided to enter the trade at that level, you need to purchase the strategy, you need to get a strategy, and you will understand, right? If you won't invest, you will not make any money. Okay, good trade, well done. I'll speak to you later.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from, traditional caste community conservative parameters to something which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji you use the most to send to each other?
There's a bear, which basically we use for indicating a hug.
Yeah, that's our language basically. Bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue. And it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotion